Hi guys, welcome to our webinar. This is CLIQ company and my name is Olga. And today we're going to talk about 5 most important things that you have to start doing in your trading. And let me remind you that our webinar is interactive. So if you feel that you would like to ask us a question, please do so. Our team will answer your questions within the webinar. Okay, actually today we're going to talk about 5 things that every trader or any trader must have. About 5 must-haves for any trader. And it's not a fashion tendency. We actually identified 5 most important things that are necessary for your profitable trading. I hope you're ready. You grabbed a pen and a notebook. So let's go. We will start from the first thing, from first must-have. Start working from the smallest to the largest. For example, use one currency pair. The most common is Euro USD in your trading, and study its features: time activity, volatility, potential profit. Once you understand how it moves, gradually add other currency pairs to your trading list. For example, let's look at the terminal, how it works. And we are going to use example of 2 basic currency pairs. It's Euro USD, Great Britain Pound USD, Australian dollar, and New Zealand dollar. So what is the difference between them? I will show you. For example, you take Euro USD, and this is the most active pair, currency pair during the European European trading session, as well as Great Britain US dollar. So if you see the signal, for example, it's clear for sell, we can actually these currency pairs per day can give you from 100 to even 150 pips. This is the first example. It's more than 100 pips. This is next signal for buy, for example, from here, and this is more than 100 pips. What about GBP USD? Very volatile, very active during European trading session currency pair. It gives us more, even more. In the first example, we can see that we are earning more than 110 pips. And next signal is for buy, and almost 800 pips. And what about Australian and New Zealand dollar versus US dollar? These currency pairs are active in the so-called Asian session or Pacific session. They're not so profitable as the previous one, but still you can get your profit. Actually, we are discussing the difference between European and Asian trading sessions on our previous webinar, so you can check up and you can refresh your memory and you see the difference. You will understand clearly the difference between them. So let's check the example. Almost 400 pips. Almost 40 pips. Not as much as in previous example. And almost 50 pips. This is Australian dollar, this is New Zealand dollar. They're alike, actually they move alike. It's a little bit more profitable. So New Zealand dollar gives us more than 55 pips. And next transaction, I think we can get 80 pips and even 120 pips. So I think you understand the difference. Okay, so the next thing is start trading with minimum lot. For example, 0.01. And only when your deposit increases, you can increase the volume of your trading. Of course, taking into account the risk management and money management. Number 3, elaborate or use or work one trading strategy at a time. I know that there are a lot of temptation in the internet with the free access to internet because of Wi-Fi. And even Google search can give you super and top profitable trading strategies. Please test one of them. Work it out. Analyze the profitability ratio. Does it fit you? Perhaps it's possible to use not all the techniques that they give you, but some of them. Then study the next one and go on using the same principle. Perhaps you can combine all the elements in your own trading strategy. Often traders, by the way, use several trading systems, depending on the market situation and the style of trading, of course. Number 4, one entry, one transaction. At the beginning of the trade, in order not to overload your deposit and understand how the signal is being processed, open one order. And when the management system allows you to do that, you can open the two orders. And one you close manual with the help of take profit order, and leave the other transaction or trade for the future, for the perspective. Thus, you will ensure a possible loss with the second transaction and increase the profit per the unit of your time. Let's look at the terminal. What I mean. For example, you work with the basic currency pair, Euro USD. And for example, you open sell order. This is order number 1. So your deposit is not so big. You didn't increase it yet. You just have started. So the first order brought us almost 60 pips. We see the next sell. We see the next signal. We get the confirmation from it. We open the sell. And we got almost 70 pips. Very good. And only after increasing the deposit with these two successful profitable orders, we can open next two cells when we see the next signal. So we open cell 1, we close it with take profit, or for example, it's almost 100 pips, and we leave cell 2 for the future. And in the end, we close it even with the profit of 170 pips. So this is example of how actually we work with this kind of insurance of our deposit. Okay, let's come back. Now we are going to talk about trading plan. Consider the trading plan as a guide answering all the possible what if questions of your trading. As they say, forewarned is forearmed. So quite a lot of traders confuse the trading plan with the rules of the trading strategies. Ladies and gentlemen, they are not the same. They're absolutely different things. Most often, the trading plan includes a lot of unnecessary things, and it is confusing. And it turns out to be that it seems to be a trading plan, but we don't have much use of it. So, what does a good trading plan consist of? We will show you the most important parameters that you need to include in your trading plan, and they are divided by the categories with examples, but remember, these are just examples. So you will need to create your own items, your own points of the trading plan based on your trading strategy, your trading management, or on your management, risk management, overall level of risk, and the preferences. And item number 1, points number 1, is force measures. It should be clearly specified, or it also the necessary preparatory measures should be taken. What will you do if, for example, they cut off electricity or power, or Windows crashes, or in case of the internet disconnection, or another end of the world comes? Precautions against such circumstances usually include a laptop with charged battery in addition to the main computer, a smartphone or a tablet with the mobile version MetaTrader 4, 3G modem or the smartphone with modem mode, and a list of nearby cafes with their free Wi-Fi. Number 2, restrictions on profits and losses. It should also be written in your trading plan what will you do in case of very large profit. Ladies and gentlemen, sometimes large profit affects the trader as much as large loss, or in a series of unprofitable trades. And this is also highly individual, of course, and depends on your style of trading and your risk. We will give you a few examples for you to understand what I mean. For example, for example, after reaching profit of 20 pips or 50 pips, it's individual, this day I no longer play. Or after 5 losing trades in a row, I take break for a week. Or with a drawdown of 20% of my deposit, I stop trading till the end of the month. Number 3, emotional states. Emotional states also should be taken into account because it affects trading a lot. For example, if I'm sick or depressed, I don't trade this day. If I quarreled with my husband or wife or whatever, for example, or just if I want to sleep, I do not trade. Number 4, advanced trading techniques. or trading algorithms. If you apply several trading strategies, then describe the conditions when to use each of them. For example, if the last week market was in a trend, I apply strategy A. If the market was in a flat, I apply strategy B. Or, for example, I use advisor to enter the markets. Then I turn off the advisor and I manage the position according to the rules of the strategy C. Number 5. Sources of useful information. Examples. I watch the list of upcoming news and events in economic calendar. By the way, for example, our website of CLIQ company also provides our clients with such a calendar. Let me show you. So this is our website, CLIQ. This is our economic calendar. Everything is clear every day. The timing, you can use it. Okay. So for example, I do not trade half an hour before and half an hour after the very important news. Or if that day there is non-farm payrolls, I do not trade. I stay away from the market. Or vice versa. I trade exactly this type of news. I put possible setups on the charts, but before entering the market, I always check with the analytics. If there is any contradiction, I recheck the opportunity of entering the markets and open any trades. 6. The aims of trading. They can be short-term and long-term. So you have to put goals, aims of your trading in front of you. It's important to keep a memo in front of your eyes why you actually doing all this. This will help you both to return from the earth to the ground, to the heaven, from the heaven to the earth. For example, why do you need thousands of transactions a day if your goal is minimum 10% per month? And it will also help you to remember long-term plans during the periods of drawdowns. Examples. My aim, for example, is 5% per month. Therefore, I understand that chasing a big amount of trades and looking for the entries when there are none, it's stupid, so I don't do it. I like the risk. It's example number 2, and I'm like adrenaline addict. So I like the risk. I like opening a lot of transactions. I like this thrilling feeling, and I understand that such an approach is dangerous for my deposits. So I do not deposit more money they can easily lose. Number 7, something on your choice. It's a little bit funny, but trust me, there are some traders who really do that. They create their own rules for trading. For example, closing my beloved cat in another room while analyzing the market. I think it's this person or trader don't want to be disturbed. Or tossing the coin and let the eagle or tail decide whether to trade on the news or not. And this was all jokes, of course, and now serious. In fact, I believe that trading plan is the contract with yourself, and all the items of this contract have to be followed or must be done. Now let's talk about checklists. It's also a very important part of our trading, one of the must-haves. It doesn't matter who you really are. I mean, are you an experienced trader or just a beginner? A well thought out trading plan will help you and can be a vehicle for you that help you to get to your destination point. But it's not enough just to have this trading plan. It's also one thing that you need to do is to follow it. I want to ask you a question. Do you really have the clear system that you would follow, properly executing, exiting, and entering of the trades in markets? Some of us will say, yes, I do. I do have and I stick to it, while others simply do not follow the rules that they themselves define for their trade, and in the end they get a bad result, depression, and uncertainty in trading in general. So how do you follow your plan? The most important thing is, which prevents us from doing it, is, strangely, it's our brain. We think too much and we guess too often. A good way to increase efficiency is to make a print of the checklist for entering and exiting transactions. Well, what is the checklist? The checklist is the list with necessary items or points. In trading, this is the list of the conditions of entering and exiting the markets. You will be surprised, but this is an ordinary sheet of paper where you tick each of the conditions, and if at least one of them is not fulfilled, you don't enter the markets. How do I make this checklist? You need to make the rules of your personal trading strategy and you use them to the list of the items to which you can simply answer yes or no. So, if you follow my examples, your trading list, your checklist will look like that. Everything is very simple. Look at the slides. Let's suppose your strategy is based on three indicators. Two of them are trendy, and you trade within a day. You pay attention to the levels of the price. Two of them are trendy, and one is oscillator. As the trendy indicators, you use EMA, it's exponential moving average of period 25 and 50, and as the other instruments, you use stochastic. Your checklist might look like this. You open, for example, sell position. Number one, is the terminal opened on H4 time frame? Because my trading strategy requires exactly time frame H4. Yes, no. Number two, is this a downward tendency? Meaning, is EMA 25 is below EMA 50? Yes, no. When 4-hour candle is number three. Candle closes. Does the stochastic exit the overbought zone? Yes, no. Are the historical levels, the psychological levels exist at that time? Yes or no? Is there any news in the next half an hour? Yes or no? And ladies and gentlemen, let's look at the terminal, how to work with it. For example, Euro USD. We check, yes, time frame is H4, so this point is fulfilled. Next, we're checking, for example, we start from here. We have two movings and we are waiting for one moving average is below the other. This is important parts of our trading strategy. And we see that stochastic is not an overbought zone, it's an oversold. So we just don't read the other item of our checklist, our trading plan, sorry. We just wait for the opportune moment. And we can see that the historical level 1200 exists. So it confirms our signal. It gives more confirmation, makes it more proved. So we take sell as soon as we see the confirmation is stochastic. According to our strategy, this is the main exit point. So we take sell and we open sell. How much we can earn? Well, we can earn more than 180 pips. We see the next signal is stochastic. Yeah, we take another trade, 81, a little bit less. And the third signal appears. So everything works according to our plan. So we have 3 profitable trades in a row. Now we are going to talk about correcting mistakes. It's also a very important part. And actually the absence of the work with errors is the biggest mistake of all the traders. As they say, we learn from mistakes. But in Forex, there are some critical mistakes that can be crucial. Such errors during the trading cannot be corrected, but still you can avoid them. So this is what we are going to talk about. Trading without strategy, the first mistake. Most beginners start trading without any clear algorithm, but it's not a fact that even if it exists, the trader will follow it. When trading without strategy at all, a trader plays a game, to be or not to be. But ladies and gentlemen, it's not Shakespeare, it's a serious business. Next, the lack of plan and risk management. Each newcomer, for some reason, believes that this is very boring activity and he or she should get rid of it. But really successful traders, they all have come to this in the end. 3. Emotions. Often it happens that a trader, after receiving some profit, starts losing his deposit. I'm sure that every one of us at least once came across this situation. Why it happens? The fact is, after several profitable trades, the trader thinks that he can control the markets, and he considers himself to be the king of the world, and the market obeys him. He starts to open positions with the expectation of very big profit, loses control, and even after having stop losses, which is inevitable part of markets, tries to fix everything, and in the end, eventually, he loses his deposit. So now I think you understand what you should not do. And the last thing is the size of the deposit. Trading is primarily a business, and that requires not only skills and knowledge, but also quite a serious capital. Only very risky people work with small deposits. Well, I'm not talking about starting points when you can have only $100 to work for work in this business, and you can work on the cent accounts. By the way, CLIQ company gives an opportunity to back with the greater leverage and minimum lot of 0.01 and with the minimum deposit of $100. This is our account types. So you can see that minimum deposit starts from $100. But back to the deposit size. For clarity, let's consider a very vital example. Imagine that you have a capital of $50,000 and you open a small restaurant. Can it bring you fortune or recoup itself in the nearest 1 month? Of course not. If it pays off in the first 2 years, it can be considered a good investment. But in trading, people usually believe that they can steadily get 100% profit per month or per week sometimes, and with the initial capital of $10. And they are planning to become the new Warren Buffett. Of course, it doesn't work like that. And trading is business, and the business needs investment and time. Next thing that we are going to talk about is greed. For example, a trader closes his order in profits. Very good then. He believes that he didn't take all the profit from this entry, and he opens the position again. And what is characteristic? In the same direction and with increased volume. And the market turns against him, and he lost his profit as well as his deposit. Do not be greedy. Stop. Analyze the situation. What has changed? If the analysis allows you to do that, open the next transaction, open the next position, but better yet, wait for the new entry points. And the sixth is obsession with indicators and strategies. They can also be crucial. We have noticed that traders are very keen on finding the very holy grail that will allow them to actually make money everywhere, every time. The truth is, no indicator, no trading system will ever give you 100% guarantee that your transaction will be profitable. Any indicator is just a tool and tries to analyze the market from the point of view of mathematics, while Forex market or any market is also a psychology, or mostly a psychology. There is no grail, holy grail, and there will never be such things. And the sooner the trader stops looking for it, the faster he starts earning constantly and stably. Analysis of the mistakes will help you to avoid losing your deposit, and you will continue to work with the Forex markets with more confidence, which is very important. And you should remember that making mistakes is normal, absolutely. What is really bad is not making conclusions from their mistakes, from our mistakes. And the next thing that we are going to talk about is rest. The rest for a trader. What do you think? Trading, is this a pastime or work? In order to understand what kind of rest or vacation or break do you need, or a trader needs, you need to determine how in fact he trades Forex. If he trades it responsibly as his work, then the rest should be appropriate. If he considers trading as the just passing passion or just a habit, so I don't think that this business requires a lot of rest, and can be considered as a pastime. But there are still some factors that affect the work and rest of the trader. If, nevertheless, the trader has a very serious and responsible attitude for trading, what factors determine the time of the rest and its duration? First, it's dependence of the rest from the trading session. So, actually, the kind of rest, the duration of rest depends on the trading session, which is convenient for you for trading. If the work and availability of free time allows you to trade European trading session, then you have enough free time to have a good rest and sleep at night. But because you're using actually European and American sessions. But there are other people, there are other traders who prefer trading during Asian session. So they have to trade at nights, so they can only have can count on having a good rest during day hours. Next, trading style. The style of trading plays a significant role for the trader. Most scalpers who trade short time frames, they have to monitor the market and the price attentively not to lose a signal, opportunity to enter the market. They get tired. While the others, who, for example, practically medium-term traders who use a time frame from H4 to daily 1, they don't get much tired. And if we are talking about long-term traders, they don't talk about fatigue or tiredness at all. Manual or automatic trading. Also want to mention automatic trading in Forex. There are both supporters and opponents to the trading robots. But a properly tuned robots in a short period of time with your control, of course, and monitoring can bring you profits. The main two things are very important. Number one is better. It is better that the basis for the trading algorithm of the robots is your trading strategy, which you have already tested and which gives you good result. Number two, try to use high quality service. And I want to draw your attention to the fact that CLIQ has a special account dedicated to the robot trading. I would like to show you that. It's also over here, and the minimum deposit starts also with 100 USD. Okay, so in general, I believe that if you consider trading as the way of life, some special rest is not needed, because actually with the access to internet, you can trade everywhere in the world, even under the palm trees in Maldives. And I hope these must-haves were important and useful for you. And CLIQ wishes you the very successful trading and excellent profits. And thank you for staying with us. Keep in touch and stay with us. Ask us questions. We will be very pleased to answer them. We need your feedback. And if you want to learn more about trading nuances and trading tips or tricks or tricks, go to our site of CLIQ company and sign up for the education course that suits you most of all. Have a nice day, guys. Bye-bye.